but I want to welcome everybody to the TMC Connect Partner webinar we have today. I'm excited to be here with iEmergent's Bernard Nasuli, data expert, and he's going to be talking about the mortgage lending playbook, turning gaps into growth, sharing his insights and data-driven knowledge. Before I hand it over, I just want to do some light housekeeping. This session is being recorded. All of the attendees are muted, but if you have any questions for Bernard, please just drop them in the chat and we'll be sure and get those answered. And then everyone that's registered is going to get a recording of this and also the slide deck that Bernard will be sharing today. And with that, I'm going to hand it off to you, buddy.
Outstanding. And of course, I think as I said that, I closed my PowerPoint, so got that going. So
Please talk about this.
we did talk about this. We did talk about this. All right. Here, I'm gonna go to this, and I'm gonna say file. And I'm gonna say this is the strategic market playbook in Scottsdale. Okay. All right. We're good to go. Okay, wonderful. Well, thank you. Again, thanks for the introduction. Thank you, TMC, for the opportunity. Bernard Nasuli, COO at iEmergent, where we built a growth platform for lenders. And we have come up with a roadmap that takes you from strategy all the way down to tactics. And I'm going to start talking about that right now. So this is the focus on from gaps to growth, specifically focusing on the mortgage lending playbook. But I want to talk to you about that overall roadmap first to show you where the playbook fits. So it's starting, over here, and it's starting with the senior leaders at your organization who can look across your footprint and see the opportunity in your markets or even across markets to see if there are gaps in coverage in any of those markets, and to compare the market intelligence in every market, again, individually and then across the spectrum. So then you can figure out, well, how are you going to prioritize your resources, right, across your markets? And then start drilling down into specific markets to say, okay, we've identified these 3 markets as our primary focus for 2026. What are we going to do? How are we going to execute in those specific markets? And that's where the mortgage playbook comes into play. So it's this piece of it. Again, we're going from more macro of looking across the entire lender footprint down to a specific market within the footprint. So what does the playbook look like? Well, it starts with the data, and then you locate gaps in coverage if you have specific areas where you're not lending or there's more opportunity. It's creating specific mortgage opportunity zones, and that's the iEmergent word. That's the iEmergent code to just say, create a custom market within a market. Then we're going to capture the competitive landscape. Well, what does that mean? It means we're going to identify who's doing the business in those specific areas we've identified. Then we're going to review the inventory to see what is actually for sale, what properties are actually on the market. We're going to identify the community partners, and we're going to rinse and repeat as necessary market by market. But this is for one specific market. So since TMC was most recently in Phoenix, and that was a lovely conference, especially in mid-February, I figured we would take a look at Phoenix again. So it's starting with the data. Well, what does that mean, starting with the data? Well, there are two kinds of data. There are internal data and external data. The external data is the forecast of saying, whether it's our forecast or your own forecast, of saying, where is the action going to happen in my market? Where are we going to focus our resources? Our resources are finite. Our resources are valuable. There's only so much that we can spread around. So where are we going to focus our resources in a specific market? And again, here we've decided Phoenix is one of our top priorities. So that's why we're focusing on Phoenix. But initially, when I was looking at Phoenix, and specifically we were TMC, we were in Scottsdale, which is outlined in red. I noticed that honestly, there isn't, on a relative basis, there's way more opportunity outside of Scottsdale. And so I started looking at some of these other areas. Okay. But, and I'm going to zoom in here just so that we can see a little bit better. The point is that I'm looking at the forecast. So red, hot, blue, cold. Red just means there's more opportunity, or we're forecasting more opportunity in those areas. And you can see, again, the neighborhoods, the pockets of opportunity within the larger Phoenix market of where mortgages are going to happen. You couple that map with the dots that you see, and the dots represent, this happens to be ABC lender, right? ABC lender dots. So these are 2025 purchase loans that ABC lender originated in Phoenix. And so each dot represents one of those originated loans. And then the power of seeing the dots or the data visually is that you can immediately see where you are lending, and you can immediately see where you're not lending, where you have potential gaps, right? So that's the key. But it's starting with the internal data, excuse me, the external data, the forecast, and you couple it with the internal data, your locations, your branch locations represented by stars, and uh, your originations represented by the blue circles. So internal and external data. Okay. Then we are going to find the gaps. So again, on the left-hand side is just the map of the forecast. And then we zoom in on the map to the right to see, okay, now that I'm looking at this specific area, what does that look like? Well, we have a branch right here, and we have already been lending, we have already been originating in this area around the branch, right? Well, this is called um, uh, Queen City, this specific area, this lot. And so, there's some spots, some areas really that ABC Lender hasn't touched at all. So that's the phase two of identifying gaps in coverage in your existing market. Even though we are lending there, there is absolutely more to be had. There's more business there. So we're now at step three, which is creating those mortgage opportunity zones. So what do we mean by that? When we look at the map on the left, we can see, again, that we have been lending, but based on the forecast, we have reds and oranges and yellows, the hotter areas of our market that are indicating, there's more to be had. There's more to be had. So here, there you go. So as an example, when we're looking at uh, this area, which really translates into this green blob, uh, in 2025, there were 6,500 purchase units in this MOZ, in this green area, and ABC Lender originated 60 of them. So that's a share of just under 1%, right, at 0.9%. But ABC Lender had a purchase share of 1.7 in all of Phoenix. So what does that mean? It means that the ABC Lender was lending more, had a bigger share in Phoenix in the totality of the market rather than relative to this green area. So they are underperforming in this green area. And this green area happens to be Moz, an area that we've identified is going to have a lot of growth. How can we quantify that, or can we quantify that? Well, yes, the idea is that if instead of having a 0.9% share in this green area, we elevated their share to match their share of the total market, meaning 1.69 or 1.7, that would represent an additional 21 million loans, or excuse me, $21 million, $21 million, 110 loans. If they had the same share inside of this zone as they do in Phoenix as a whole. So these are tangible numbers, right? That you can wrap your head around when looking at this. And that's why we create these specific MOSs so that we can be laser focused and very pinpoint when we are spending our resources. Okay, so once we've decided, hey, we're going to focus on that green area, well, what do? Well, we capture the competitive landscape. We take a look at who is actually doing the business in those areas. And there are four main parts. The first part is, who are the loan officers? Who are the loan officers who are actually driving the business, not in all of Phoenix, but in the green area or in the MOS we have identified. And this is doing just that. Here, I'm just showing you a snippet of the top LOs. And you can see Christie works with Velocio Mortgage. So I believe they're a builder, but Velocio Mortgage, she did 159 loans in the US in 2025. And 148 of those were in this specific green area. What does that mean? It means that she's doing the majority of her business in that green area. And even though she is not the number one loan officer based on volume that you even see in these top four, she is doing the most in that area. And therefore, she's a critical part of that community, of that MOS. And, you know, potentially having a conversation to recruit Christy to come over would be critical or would be informative. And again, you could take a look at this and say, well, Bernard, I just see, builders on here and I'm not as interested. Okay, great, point taken. But the idea is that the rest of the list might have some of those uh, loan officers that correspond much better to your specific lending strategy. And being able to know that, for me, if I'm identifying this green area, this MOS to grow in, I don't necessarily need the top LO in all of Phoenix. I need the top LO in my green area, in my MOS. So that's the idea. And then similarly for your competitors, your direct competitors in terms of other lenders, who is actually doing the business in this MOS? You can see Rocket, United, Lennar, Velocio, Taylor Morrison. So yeah, a lot of new construction, some builders. But you can see what they've been doing in the US in terms of units, and you can see what they've been doing specifically in this MOS, in this mortgage opportunity zone. And now, if I'm a lender and I'm looking at this, well, do I have the right products and programs to compete with these lenders? If my main competition are builders, then I better have a builder product that can compete with them. All right, we'll keep going with the competitive landscape. We've talked about LOs and lenders. Now we're looking at the top agents, both on the buy side and on the sell side. And here, looking at specific agents, we're saying, oh yeah, Joan Hall again with Lennar. So maybe let's look at PCD here, Realty. Albert with PCD. He did 737 listings. He and his team in the US, but 158 of those were specifically in our MOS. And same thing on the buy side, where we have Danny with Compass. Danny did 260 buy side transactions, and 119 of them were in our MOS. So I absolutely need to share this information with my loan officers so that they can make sure they are building the right relationships with the right agents in the right area or in the area I've chosen to compete in, my Moz. Same idea with builders as well. This is a view of the top 10 builders in my Moz. Uh, Lennar, TM Homes of Arizona, and so on. Here are their units, and here are their total dollars. Now, on the right-hand side of the table is the favorite or the lender funding the majority of those loans. So you can see that Lennar had 633 units. They used their own mortgage, their internal mortgage company, Lennar Mortgage, to fund 609 of those, or 96%. So as a lender, I want to go down this list and I want to find somebody who doesn't necessarily have a captive lender. So these first three definitely do. Velocio might be a captive lender, but then I fall onto Meritage Homes. Meritage Homes did 270 transactions, and Loan Depot funded just about 70% of them. So now, as a lender, I need to make a decision of, hey, number one, can I compete with Loan Depot? Do I have a product that can compete with what Loan Depot is offering Meritage Homes? If yes, great. If no, move on. But if yes, then okay, now I need to find out how to get Meritage Homes' attention and how to communicate, my products. Um, if no, then you can still say, all right, well, Loan Depot has 70% of that business. Is 30% of the Meritage Home business, is that enough for me to again, spend my time, energy, and effort developing relationships with Meritage Homes? And again, if the answer is yes, that's enough business, then great. How do I get the attention of Meritage Homes personnel in order to communicate my value proposition as ABC lender? And if not, then great. Okay, at least I know and I move on. But seeing some of this information, because maybe down the line, the number 12, the number 15, the number 20 builder may not have a captive lender or may not have an agreement with a specific builder, or excuse me, with a specific funder, and therefore ABC lender, I can come in and step in and grab some of that business. Okay, once we've assessed the competitive landscape, I want to figure out the inventory in my Moz. What is actually for sale? What am I seeing in my Moz? And now I have my map that contains these diamonds, and every diamond that I see represents an MLS listing. So if I zoom in, I can see on my MLS listing, I can see the MLS number, I can see the listing agent name and contact information, and a little bit of details about the property. So if I'm a loan officer at ABC Lender and I want to talk to, Kenny Klaus about this property, the first thing I would do is not pick up the phone. The first thing I would do is click on the Zillow link right here in order to make sure that the property is still active and on the market. Once I confirm that information, now I'm ready to have a conversation with Kenny, pick up the phone and say, hey, Kenny, this is Bernard with ABC Lender. I noticed you have a property for sale on East Meadowlark Way. Let me tell you about ABC Lender products, because we have fantastic products and we can absolutely help you sell this product faster, or this property faster. Let me also tell you about ABC Lender programs. We have a great down payment assistance program. We have a great grant program for which this property qualifies. Hey, work with us. We can help you sell this property faster. And then option three is, hey, Kenny, this is Bernard at ABC Lender. We have some borrowers that are very interested in moving into this neighborhood. Let's see if it's a fit. So work with us, work with ABC Lender because we're providing you this value. And now, Kenny, here's your pitch, and is saying, "Oh, this person actually did some homework on my one of my listings. Let me at least listen to what they say, and then if this sounds good, then hey, let's give these lenders a shot and develop, and you start developing that relationship." All right. So that's determine the inventory. The last step here is working with community partners. So what does that mean? It means, we've looked at the LOs doing the business here. We've looked at um, the other competitors, the other lenders. We've looked at the agents doing the business here. We looked at the builders doing the business here. We even looked at the inventory. So what else can we do in order to get more business in this specific MOZ? Well, we can talk about community partners. Which organizations in our MOZ can we team up with in order to get closer to those end borrowers? Well, here, what I'm showing on the map, there are two symbols. One is a green square, which represents places of worship, and one is a purple triangle, which represents a housing nonprofit. Okay. So here you can see if I click on this green square, this is the faith-based organization called All for Jesus, and it's on Kennedy Drive in Santan Valley. Now I can pick up the phone and call the leaders of this organization and say, "Hey, this is Bernard Nasuli with ABC Lender. We would absolutely love to sponsor your next event, or we would love to have a lunch and learn, or a housing seminar." And when we do that, when we're talking to these community partners, when we're doing that, we're doing two things. Number one is we're keeping the ABC Lender name top of mind for anyone associated with the organization. Two, and this is more important, is we're demonstrating our commitment to the community. We're actually putting our dollars in it. We're investing in that community. And so in addition to places of worship or housing nonprofits, uh, we can show schools, hospitals, HUD-approved counselors, libraries, VA centers, any of these and more, so that you can really figure out who is part of the fabric of this community and how can I integrate myself into it. Right? This is especially so. This is great for any lender, whether you are an IMB, a bank, or a credit union. But this is also specifically of interest for banks uh, who have, CRA requirements and who need to be lending in the communities where they have branches. So of note. Okay, so that is kind of the summary. I'm gonna come back to the six steps, starting with the data, both internal and external. Again, the internal is your originations, your branches, and the external is the forecast of where you are going to be investing those resources. Seeing them visually on a map so that you can locate any potential gaps in coverage, any neighborhoods where you're not necessarily doing as much business as you could be or as there actually is. Then creating those specific mortgage opportunity zones, the specific MOZs, so that you can be so absolutely focused on where you are going to be spending your resources. And then identifying, well, who's already there? Who's in my MOZ in terms of LOs, agents, builders, other lenders. And then what is actually for sale? What is on the market? What is there, and how can I start talking to some of those agents and developing those relationships? And again, finally, those community partners, which other organizations can I lean on, can I partner with to get the most out of my community, to really pinpoint other borrowers. And there should be a part seven here, which is uh, the rinse and repeat, or the repeat as necessary or as often, so that you can do this, on a weekly basis, on a monthly basis, on a quarterly basis. But these are the tactical steps that you can take in any market in order to go from, boy, I don't know where to start, to, oh, these are the people I need to recruit. These are the people, the referral partners that I need to start developing relationships with. These are some of the builders out there. This is actually what's for sale. These are some of the other partners where I can, talk to and reach more borrowers. That is the Take Action Playbook. Thank you so much for attending today. Happy to, if you have any questions, if you want to shoot them in the chat. But otherwise, I can just show you, if you want to get in touch, my Emergent. I can spell my company, emergent.com, and you can request a demo or send us a note. Absolutely would be delighted to talk to you about your specific market so that you can see the playbook in action in your area. Melanie, any last housekeeping items? Melanie has gone dark. Okay. Um, Excellent. Well, again, thank you so much for spending half hour with me. I really appreciate it. And I look forward to seeing everybody in Austin. Thanks, everyone. Oh, please, I'm sorry. Mark Renault, here we go. Can you explain the process and how potential transactions in any area are determined?
Sorry, Bernard. I was frozen for a second. I'm
Oh,
back.
no, no worries. Uh, oh, yes. Okay, so Mark is asking about the forecast. So how are we determining the forecast exactly? Gotcha. Yep. So that's a good one. So when we are saying, hey, these are red and orange and yellow areas, we are focusing on five different data sources. We're focusing on historical HMDA. So, hey, good news, the 2025 HMDA was just released last week. So that is as fresh as it's going to be. But we focus on HMDA. We focus on the Bureau of Labor Statistics to identify, what's happening in a community job-wise, and employment-wise or unemployment-wise. We're looking at American Community Survey, census data, and demographic data. And we bring those five sources together so that lenders don't have to spend their time going through each source and parsing out what's important and what's not. Um, anyway, the culmination is that every year when HMDA comes out, we go back and we analyze how close we were to the mark. How accurate were we? So I can tell you we've been doing this for, over a dozen years. And at the national level, we have been accurate, within 90-95% and above. And that's great, but that doesn't help our clients. Why? Because mortgages are local. And so our barometer is accuracy at the county level. And there are over 3,100 counties in the US. And so we especially focus on the top 1,000 that capture 94% of all the volume. And for those, we are 80 to 85% accurate and above. So when we say, hey, this is what we see, this is what's going to happen in this market, that's where that confidence comes from. So hopefully that's all good. So thank you for that question, Mark. Thank you for that question, comma, Mark. All right.
All right, I think that's it. You were at time now. Great job,
Per-
Bernard.
Perfect. Perfect.
All
Excellent.
right, thanks everyone. Have a
All
great
right.
rest of your day.
Thank you, TMC. Thanks, everyone. Bye-bye.